Appreciate your time with us. Well, as promised, now let's turn the spotlight on the cement space, because this is one space where some good news has started coming in. Whether you look at the macro numbers, like the core sector numbers that came out yesterday where production is up, or you look at the micro numbers, look at what the companies have been reporting. We have Jashandeep Singh Chadha, Vice President Equity Research at Nomura, joining in. Jashandeep, great to have you on. A lot of excitement in the market. A lot of people are now watching out for the cement space. And my opening question is exactly that. The slight increase in pricing uptick that we're seeing, some improvement in volumes, do you think this is going to be durable? Is cement in for a very strong second half, especially once the monsoon period is over?
Yeah, hi, good morning. When we talk about, the positivity that we are seeing in this sector, one part is that the pricing in the first quarter have improved significantly, 4% up quarter on quarter. But however, I think, another thing that we need to focus is that the volume growth expected in the second half is also very strong. So both factors, revenues are a factor of both volumes and pricing. Pricing has been strong. I believe, because of seasonal factors, second quarter might see some dip in the pricing, and then they'll recover in the second half. But the volumes are also, strong, and in the second half, I believe the volumes will be much higher than, the first half. So I think there is sustained positivity in the sector.
All right. Hi, Jashandeep. Good to see you. Thanks a lot for joining in. Give us a few details then. Prices that are expected to be softish in a seasonally weak quarter, which is the monsoon. But it's encouraging to see actually prices are holding up in July, which is, giving you a sense that competitive intensity could be cooling off a little bit. For the year on the whole, what kind of price increases are you looking at for the industry?
Yes. Hi, Nigel. Good morning. So, we have been building around 3 to 4% YOY price increase in FY26. We maintain that view. We believe that, 4% percentage increase in first quarter, then there's slight dip in the second quarter, and in the third and fourth quarter you will see that the prices will start to improve. So 3 to 4% of YOY in FY26 is an estimate that we built in.
Okay, got it. All right. What do you make of the comment coming in from the UltraTech management that South could be the new North? How are you positioned geographically? South is a tricky one. Sometimes they have their span of good news, and then those stocks can move up 30-40% and they can correct 30-40% as well. Case in point being a Sagar Cement. Today it's up. The numbers look quite good, but we have seen that one correct from 300 to 200 very swiftly as well, and then move from 200 towards 300. Your view on the South pack particularly?
So, if we look at South versus North, in the current context, South, yes, look better because there have been significant price increase in South versus North. But there are two things that we need to be cognizant. Firstly, the significant price increase we are seeing because South for a very long time have seen depressed price, whereas North has steadily seen incremental increase in prices. So North is at a level where their prices are all-time high, and we don't expect any significant increase coming from them. And the 30 rupees or 20 rupees per bag price hike in South, historically it used to happen like that also, and the prices go down in similar fashion also. So that's why there is a lot of volatility when we talk about South players share stock price. But the second thing that is very important is the volume growth. I believe that there are far more structural, projects that are coming in the North, and also supportive government in North. So hence, I believe the volume growth will be, more robust in North than we compare it to South. So, again, revenue being a factor of both volumes and pricing, it's very hard to say that, South will be better than North. What I can say is that if you are not able to decide, maybe a pan-India player like UltraTech is the way to go.
All right. So UltraTech is one stock which you like, and I think it's your preferred stock in the segment. What about the smaller stocks like Nuvoco? It's a far cry away from the IPO price. Investors who got in there, they haven't seen that price. Now the results are looking up, though that inorganic acquisition that they've done, we'll have to see how that pans out. What's your view on that one? From the mid-cap space, what do you like basically?
So right now in the mid-cap space, our pick will be Ramco Cement. Because of a couple of factors, the pricing being one, we believe there is a lot more delta in cost that the company can, use. There are still a lot of power and fuel cost saving measures that they can do. So hence, despite a lot of competitive intensity in their region, they can improve their unitary EBITDA by just focusing on the cost front. So Ramco is one stock that we like. And for Nuvoco, we believe the inorganic expansion is like, in FY28. It's an expensive expansion that they have done. We will have to see how much of the capex they will have to incur in bringing that asset to their cost structure. So we are right now, we do not have a buy rating Nuvoco, but Ramco is one stock we like.
Okay, all right. What about the Adani Cement twins? They've been going about their branding exercise as well, with putting Adani Cement on those bags as well. What is your view? ACC is extremely cheap on a valuation parameter, but besides the cost, matrix that play out, I think the street is fearing that at some point of time it gets folded into Ambuja, which normally happens at, a preference for Ambuja shareholders. So your comment on these twins, and if in case they do come together, then what is the view?
Right. So, talking about, individually, we have we prefer Ambuja. We believe that these, sustainable cost saving measures that they are doing and at what scale they are doing, there is, a scope for very high incremental EBITDA. For them. ACC, we believe there are structural challenges in that asset. So we, on a standalone basis, we do not prefer that. We agree to your view that, and the street's view that at some point in future, there might be a case that, merger might happen. And in that case, Ambuja stock holders might be preferred. So we prefer Ambuja over ACC in Adani Twins.
But all the synergy benefits mostly will be in the price, right? Because they have been undertaking various master supply agreements.
Master supply agreements, and also on the cost front and capex, 80% of the capex is happening in Ambuja, right? On the cost front also, most of the cost levers are Ambuja. So incremental unitary EBITDA of Ambuja will significantly improve versus, ACC.
All right, Jashandeep, thanks a lot for joining in this morning. 3 to 4% pricing growth for the year. Preferred pick from the cement pack is the big boy Ultratech. And if you're looking at mid-caps, Ramco Cement is one that you like. Appreciate you joining in. Thanks a lot.
Well, that is Cement in Focus for you. Let's talk about and get you an update on the